Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, on that note, let's welcome in Sanjiv Bhasin from IIFL. He's with us this morning. Sanjiv, good to have you on the show as always. So let's actually take that metal question up with you, because last week we saw a lot of profit booking coming in pretty much, across the board, ferrous and non-ferrous. How would you look at metals now?
Yeah, morning. So we think the metal trade, is in a weak spot for the time being. I think there is a lot of concerted profit booking, and we've seen that both locally and from foreign institutions, that some of the metal counters which have been outperformers are under a little bit of under a little bit of stick, and that may continue. The other caveat is that oil is raring to go up, and that it has seen the dollars weaken a bit. But the long dollar and short metal trade, I think, is being played out. So globally, 2-3 things are playing out. One, South African local currency debt had been reduced to junk rating, which I think will put pressure on emerging markets. And as a corollary to that, you could see some more unwinding in the metal counters, both on the ferrous and on the non-ferrous side.
Okay, that's an important point to note. Okay, Sanjiv Bhasin, good morning. Thank you very much for joining us. Let me look at the green side of things. Is that in the IT space? We were just discussing with our technical experts as well. Infosys now reaching the pre-Sikka level. Infosys and other IT stocks.
Yes, Lata, it's been an excellent contrarian trade. If you did trade, TCS and Infosys close to that 900 mark. TCS has been an outperformer, almost up 12% from the lows of 25.50. We still think that the best trade over here is getting a basket of stocks. Our top pick over here continues to be HCL Tech in the heavyweights, where we think stellar numbers will come in this quarter and beyond, after the one-off which they had on a particular account. The other real fire would be in the mid-cap IT place, that's the likes of Tata Elxsi and Mindtree. So as a basket, like you pointed out, I think IT should be the star of at least this week and beyond. As we see bond yields rear up above 7%, I think financials and NBFCs would be definitely under pressure.
Sanjiv, your thoughts on whether there's anything still left to play in the jewelry stocks? They've already had a dream run because of the strong numbers that we saw from Titan. Even PC Jewelers has had that rub-off shown up. Now there's talk of some sort of a gems and jewelry package. Would you still advise buying these stocks?
Yeah, so Surbi, a large part of that may have played out, but for us it's been Titan and PC Jewelers, and we stick to that. Try and stick to the two bigger brand names. In the smaller one, you'll have a lot of higher debt and low quality stocks moving up, and that is where you have to be a little cautious, because the Nifty is anyway at a precarious point. So like you said, I think if you want to play this space, you'd have to play a little bit higher, more valuations, but you want to be in firmer stocks like Titan and maybe a PC Jeweler on decline.
Okay. Sanjiv, good morning. What about Reliance? It's had a correction and now almost back to its highs.
Yeah, so Anuj, the best play on the higher oil prices is, Reliance. The other upstream companies is Oil India, which has been on a tear. ONGC again ran up from 160 to 200, but I think over ownership by LIC puts a little dampener. Like you said, I think the upstream companies seem to be in a good space. We would be cautious on some of the oil marketing companies, even though we've seen HPCL defy the odds. We still think that downstream OMCs could be under pressure, but yes, Reliance is the bellwether which is leading the Nifty up, and that is one stock which has been making new highs on a regular basis.
Okay, Sanjiv, what's your take? Would you dabble in these assets at all?
So Lata, the ARCs have been a prominent phase, but were very, very under capitalized, and there was no ascent on them. I think asset reconstruction companies would be the flavor of the next few years, and we've seen a lot of NBFCs and brokerage houses getting into that. I think ARCs would be in a very, very big and a sweet spot, given that some of the assets mismatched with base prices are extremely attractive. Say steel, for example, where steel stocks are, where inventories are and where excess capacity is not coming up, I think that would be a very, very sweet spot. So like I said, you know, given the how that promoters would not be able to participate, that cuts out one leg. So I think the biggest gainer would be good asset reconstruction companies, and I am seeing, you know, because the markets are stretched, a lot of money coming into these ARCs, which I think will be the flavor of the next few years.